Here's a question nobody asks out loud. What if the thing standing between you and a home wasn't the market, but a myth about how much cash you need to walk through the door?
That's exactly the territory Veronetta Johnson covers in this week's post. Government-backed loan programs, zero down payment options, and what Huntsville's job market actually means for buyers relocating to North Alabama. Let's start with the financing landscape itself. The central claim here is that the down payment barrier is largely a perception problem. Government-backed programs exist precisely to close that gap, and Huntsville's economic profile makes the timing worth paying attention to.
The Post puts it directly. Programs like FHA loans, USDA loans, and even zero down payment opportunities continue to open doors for qualified buyers throughout North Alabama.
So the upshot is that these aren't niche workarounds. They're mainstream paths. FHA loans, for instance, aren't limited to first-time buyers. The Post is clear that anyone navigating a life change, a career move, or shifting finances can qualify, as long as they meet the lender's flexible guidelines.
The USDA angle is the one that tends to surprise people. The name conjures images of farmland, but the Post points out that eligible areas sit surprisingly close to Huntsville city limits. Communities in Madison County and neighboring counties may qualify, which means a buyer could get zero down financing on a suburban home they'd never have guessed was on the map.
And eliminating the down payment isn't just a convenience. It moves the timeline. The Post frames it as buying years back. Instead of saving tens of thousands of dollars, qualified buyers can start building equity immediately.
The military dimension matters here too, given Redstone Arsenal's footprint. VA financing layers on top of everything else. No down payment, no private mortgage insurance, and the Post notes that a lender familiar with VA appraisal standards and military timelines keeps those transactions from stalling.
The Post also makes the case for looking past the loan amount itself. Property taxes, insurance, HOA fees, maintenance. The true monthly cost is the number that should drive the decision, not the maximum a lender will approve.
Which is a polite way of saying getting pre-approved for more than you should spend is its own trap. Pre-approval still matters, though. The Post is clear that sellers in competitive situations treat it as a signal of readiness. The financing choice and the offer strategy are connected from the start. From loan programs to the neighborhoods where they actually apply, that local knowledge question is where this gets interesting.
The through line here is preparation. Understanding which programs exist before you're already in love with a house outside the eligible zone.
North Alabama keeps growing, and the financing tools are keeping pace. Next time, we'll see what else is moving in the market.